Welcome back to Building Blocks for Apartment Investing. On this episode, we have two amazing ladies, Ashley Wilson and Rayna Mike. Ashley Wilson is partner of Bar Down Investments Incorporated and co-founder of Apartment Addicts. Rayna Mike is Chief Executive Officer of Love Apartments and Love Apartments Family Network. These two experts are here to share information on how to run a multi-million-dollar multifamily portfolio. This is a three-part series that will absolutely provide value to you and your apartment investing career. Enjoy the show. We are here to provide value to you in building your multifamily portfolio. One way that we bring value is by bringing special guests like the two that we have here tonight, Ashley Wilson and Rayna Mike. Ashley Wilson is the co-owner of Bar Down Investments. Bar Down Investments owns and operates large apartment buildings and offers opportunities for investors who are looking to passively own real estate. She's often featured on Bigger Pockets as a contributing presenter. Rayna Mike partners with investors to acquire multifamily assets. She acquires undervalued assets in high-growth U.S. markets. Rayna completes capital improvements, optimizes operations to increase the asset's net operating income, in turn, forcing the appreciation of the asset to increase the value. Thank you, ladies, for coming to share your expertise with our members.
Thank you for having us.
Thank you for having us. It's a real pleasure.
Great. I would personally like to thank both of you as well. For our listeners and viewers, we have two phenomenal, experienced investors here tonight, and we know you're gonna learn a lot. We've heard a little bit about both Ashley and Rayna. Rayna, if you don't mind, tell us a little bit more about yourself.
Well, my story goes back 24 years ago when I went into real estate as a broker, as an investor, and I started investing in single family residences. And I did about 300 flips until a few years back when I started looking at, okay, I've done so much, and yet I don't have economy of scale. I need to start buying apartment buildings. I had bought through the years 10, 12, four unit apartments and up to 20, 25, 30 apartment units. And then I started looking at a lot larger properties. And I started looking also at going into emerging markets. Did a lot of research on emerging markets and jumped both feet in, and I would never look back. I believe that's going to be, we're creating generational wealth, and our children's children should have those assets or should reap the benefits of many of those assets, even though they might have been replaced for future generations. I was born in Bulgaria. If you want to go that far back, I'm European. And I'm also an Angelina. I lived in LA pretty much all my life. And now I live a lot in the Southeast, but I'm currently speaking from Bakersfield to you. To all of you, I'm coming in from Bakersfield, California. And as Arnie says, California.
Thank you.
You're welcome.
Ashley, if you don't mind, please tell us a little bit more about yourself.
Hi, everyone. I'm Ashley Wilson, the co-founder and CEO of Bar Down Investments, co-founder of Apartment Addicts, which is a multifamily coaching program, and also the co-host of the Passive Investing Show. I started investing in real estate in 2009. I was actually working in corporate America. I worked in clinical research and development, and I worked for 3 of the top pharmaceutical companies in the world. And I worked in vaccine development. So prior to regulatory approval and submission, we would run clinical trials, global clinical trials, and I was a director of global project management for GlaxoSmithKline before I retired. While working in pharma, both my husband and I were looking for alternative ways in which we can invest, and we did not have a lot of stock in the stock market no pun intended, but we wanted to find something that was an asset backed. And what we liked about real estate was it's an asset backed investment. It had tax benefits. It's a hedge against inflation when you invest in multifamily, which we're in a high inflationary environment today. So it fit more with the lifestyle and as Rayna mentioned, the ability to grow generational wealth, which a lot of other asset classes don't have that ability. So we started investing in real estate on the side. We actually started with house hacking, transitioned into short-term rentals, long-term rentals. I started a flipping business, predominantly high-end flipping business with my father in 2014. My dad's a general contractor. He's had his own business for over 45 years. So it was a natural partnership. And we built that company. We're very, very successful with that company. And then I transitioned into multifamily in 2018. So I partnered with a couple folks in multifamily. And originally I wanted to specialize in asset and construction management. But I quickly realized how many people do not know how to underwrite, and ultimately the success of the project and the reputation of the projects falls on the shoulders of the asset manager as opposed to the underwriter. I did not want that responsibility when I had no responsibility of coming up with a business plan. So I pivoted and then launched Bar Down Investments. And since then, I have done soup to nuts with multifamily, and we continue to have that be our focus today, along with the coaching program and our podcast that we do.
So both of you pretty much have explained how you got started in investing in multifamily. If you don't mind, Ashley, I'll ask this question to you first. When you did get started, did you get started as an LP, or did you jump feet first into being a GP?
I actually invested in multifamily simultaneously as an LP and a GP. And I'm not talking about within the same deal. I'm talking about two opportunities were presented to me at the same time, and they just happened to close within weeks of each other. So I was able to jump in as a GP and an LP. I personally recommend being an LP investor before a GP investor. And that is not a self-serving, I mean, you can invest with anyone. You don't have to invest with me, but I think you learn a lot of things about how to operate, how important transparency is with investors. You can see it at a periphery viewpoint because there are so many facets to multifamily. In fact, of every single asset class I've studied, multifamily is by far the most complex, ever-changing, you can learn as much as you want about multifamily, or you can look at it from a macro point of view. And I think that being an LP investor gives you the luxury of not being under time constraints while you're learning with your first project. I then recommend someone come in a partnership capacity, as opposed to just going out and doing it all themselves. If we're talking about large multifamily, which is what I did, I never did duplexes, triplexes, quads. I never did smaller units. The first property I did, and it's the smallest property I've done, is 124 units. So I just jumped right in, frankly, because I led with my skill set, which is I know construction extremely well and I know how to run properties well. So when I approached someone, I said that the value I could provide is construction management and asset management. And at that time, they were under contract for 124 units. And one of those buildings burnt to the ground while they were under contract, and no one on the general partnership team had any experience with construction. So they were actively seeking someone to manage the rebuild of that entire building, which I absorbed and was able to accomplish ahead of schedule and below budget. So that's something they wouldn't have been able to do. They didn't have that expertise or insight as to how to manage construction. So that's kind of what I would recommend is first, ideally being an LP, second is partnering on a GP. And then if you want to go off and do your own thing, then, leading your own deals. But there is so much to learn, and it is very difficult to do it all by yourself.
I just want to make sure that everyone caught that, what Ashley said, how she got into that deal as being part of the GP. She added value. She added value by being the construction person there on that asset. I'll go over to you, Rayna. Did you start out as a LP and learned, or did you go straight into being a GP?
I could not agree with Ashley more than pretty much everything she just said. But I fundamentally, I'm a contrarian. I do the opposite of what other people do. So with my extensive experience in real estate and lending, I've been a lender for 24 years. I still am a lender. Being an apartment investor, own a private equity firm, which I do, is I go the opposite. I have never so far, I'm revealing a big secret, I've never so far been an LP because I had a huge skill set when I went into the business. So I was only GP on my own deals. And of course, I was a KP for a few friends and partners that came and needed loan guarantees. I have signed on 40, 50, $80 million loans because I had the capacity to do so. But my typical way of going in is not the way that many people go into the business. I am so appreciative to Cedric and to William for inviting two ladies, because we are a very rare commodity. I cannot tell you how appreciative I am because there is not enough ladies in our business. Ashley knows that, you guys all know that. There is not enough ladies in our business. There is maybe less than 2% that are actively owning private equity firms, that are actively investing, but I could not agree with Ashley more. Multifamily investing is not a lone wolf sport. It's a team sport. It's a relationship, very close. Every business is relationship based, but our business is more than anything relationship based. And the trust we build with our reputation, with our performance, with how we treat people is absolutely crucial. If you have no people skills, please learn people skills first and then try to do our business because people skill, if you're a computer person, come and tell us that you want to do all of our back end stuff, and please know your strengths and weaknesses. I believe this is absolutely crucial for us to understand, to know ourselves and look honestly in the mirror and say, I'm very strong here. I'm not so strong over here because I know I have weaknesses. I know I have to learn. And going as an LP on a deal, on many deals, maybe you would never want to be a GP because that is not your thing. You want only passive income. You don't want to get your hands dirty, so to speak. You don't want to be on conference and Zoom calls 10 hours a day. Maybe that is not, maybe you only want to be an LP, and that's perfectly fine. That is perfectly fine as long as you're sure about that, as long as you know. And yes, I could not agree with Ashley more on everything she said. It's amazing that we had never met, Ashley, and we are already understanding each other.
I completely agree.
Yes.
Awesome. Ladies, with the massive portfolios that y'all have put together, could you tell us, where does property management stop and asset management begin?
I have a very unique approach with property management that I don't think is well accepted within the industry. I am a firm believer that most people believe in going vertically do vertical integration as soon as possible. And the reason they believe in going vertically is for a lot of reasons, namely because you have more control, you are able to absorb the commission that you're paying out to the property management company. You're able to create internal systems, create economies of scales across properties. But namely because most people are frustrated with property management companies. And going back to something that Rayna said that applies to all aspects of the business is being a people person and having excellent communication skills. And I think that there's a huge deficit and a breakdown between communication of asset managers or operators and the property management company. The frustration is actually the fault of the operators and owners and not the property management company, but the blame is shouldered by the property management company. And what I mean by that is there are very few operators and owners that take the time to explain to property management companies how the business of owning and operating a multifamily property works. They look historically at how landlords operate multifamily, but they don't understand the run up that we've had in multifamily over the past 7 years that has made multifamily an incredibly lucrative asset to invest in. So with respect to operating and understanding the pushing of NOI through increasing income, decreasing expenses, or a combination of the two to get to the NOI approach, which is one of 3 ways that multifamily properties are evaluated, but the most common way in which multifamily values transact. They don't understand that. They don't understand the business plan. They typically don't understand how long the hold period is. They don't understand budget constraints that you have with CapEx planning and why your ROI is so important on how much money you're putting in. If you take the time and get buy-in from your property management company, get alignment in terms of how you're pushing the rents, the business plan, and you keep a pulse on that. So as markets shift, you have an open dialogue between your property management company and your asset management company. We hired someone to, we internally have someone now that runs it. I used to run it, but the point is that dialogue has to be open and fluid. If you have an open dialogue and communication, I think it's blended between the asset management company and the property management company. On paper, yes, the property management company is managing the day-to-day, but it's with support of the asset manager and support of regionals or directors within the property management organization. The breakdown occurs when you don't have that fluidity and you treat a property management company as a service provider without giving them the insight as to the business plan you're hoping to execute. So when they bring in contractors and your plan is to hold for 3 years, but the contractors give you a renovation scope and plan to, instead of putting something on that lasts for 5 years, they're giving you budgets for things that's 20 years. You don't have to plug all that money in. You can plug in something that lasts 5 years, like coat the roof as opposed to scrape the entire roof and relay a new roof. Coating a roof can last you 5 to 10 years. You might not need that full scope, but your property management company is essentially flying blind. I think it's a huge problem in the industry. I see it all the time. So with our property management company, we have a very fluid relationship. And we work hand in hand. We are very transparent with our business plan. We're not hiding the fact that we're selling. We're working with them and telling them, how do we maximize this? Where can we cut expenses? How do we keep occupancy up? Because the new buyer needs to secure an agency loan. These are all things that we keep very open with our property management company, and it's proven to be highly successful.
Okay. Rayna, what are your thoughts on it?
Absolutely. In the beginning, I started thinking when I went into multifamily that we have to vertically integrate, as Ashley said, and we have to manage our own properties. And the more I am in acquiring new assets and looking into our business model, I realized that we have to have the right property management. I could not agree with Ashley more about how the asset management company or the private equity firm literally hides the plans that are going in. They have visitors on the property. I've seen that with property management company, and the sellers have warned us, don't tell our property management company that you are the buyers, because they're not supposed to know. And I've always wondered, why is this secret? Why are they keeping a secret? And that is hurting our whole industry. Literally creating a terrible name for property management companies, blaming them for non-performance. And how can you perform and do your job effectively if you don't have information? Information is power. If I, as a private equity firm, am selling this asset of 250 units, and I am not communicating with you that I need every expense to be scrutinized, and how can I bring more value to my property so I can achieve the highest sales price? And you have no idea about it as a property manager, and then I blame you for bad results. That doesn't seem fair to me. That doesn't, and it's going on all across our industry. Asset management companies seem to be the boss, considered the boss. We are the boss, but we are a team. We have to create this teamwork and complete transparency, complete fluidity between a property management company. And first of all, you have to choose the right property management company, which it takes a lot. And then when the cultures blend between the private equity firm / asset management / property management, we need to have this culture blend, not complete separation, very open business plan, keeping them abreast of everything that we need to be changed, and don't shift the blame for just the property management company. I believe that's crucial. For our future, it's really, really crucial.